Good evening, option traders. This is Sam the Trader Geek with your Tuesday night, August 6th, 2024 options review video. Hope you had a great trading day. And we're looking at a market overview and a sector summary. And as you can tell, lots of green on the screen with not a big rebound today and taking the lead, so to speak. With the small caps up 1.25%, and the NYSE up 1.11%. TSX here, that's the Toronto Stock Exchange. I'm not sure why that's on here. VIX losing about a little over a quarter of its value in one day, 28.16%. And if we look at the sectors, we see that all the 11 sectors were in the green, some more than others. Healthcare was the laggard on the defensive side, while real estate was the leader along with financials. And technology was in third place. So saw a rebound and everything, but we just didn't hold the gains as much as one would have expected for the drubbing that we took yesterday. Taking a closer look, I don't like when this happens. Not sure why that is happening, but we can see from here that most of the indices closed midway in the range. So we had a kind of a midday sell-off. We peaked around 2-3 o'clock, and most of the indices gave up a lot of their gains. So most of them closed mid-range, and although they all gained from the open, except ARKK was 0.15% less. We look at the 5-day change and all the sectors. Not sure why this is coming up like this. It was fine a few minutes ago, but this is live video, so to speak. So you can see the 5-day rate of change with only staples in the green and the rest are pretty much down. This gives us the change from the open, and since most indices were up from the open, you can see that only defense and aerospace and solar were lower at the close than they were at the open. Taking a look at the SPX, what we're seeing here is yesterday's low. This is a daily chart of the SPX. We closed at 52.40 today, and you can see that today's candle was a little bit of an inverted hammer. We did close down low in the range, but we did close right above our options implied expected move. And recall that here's last week's close on Friday, and we had a 134-point expected move for the week. And here we are at 52.40, right on the edge of the lower edge of the expected move. The upper edge is at 54.80. So we're under all moving averages. This is the 100-day moving average. We're under last week's low, of course, after yesterday. The blue line is the 50-day. So we didn't make any progress in turning around the momentum, but this is only one day. And, we didn't see a lot of robust strength returning today. So for the drubbing that we've taken, it's going to take more than a day to recover. Hopefully, we get a follow-through day later in this week, but quite honestly, it would have been better if we opened down and then traded up to kind of get the charts and the momentum heading in the right directions, but we didn't get that. Take a look at the VIX. Here's the daily chart of the VIX, and That's today's candle down, as I said earlier, 28%. And you'll notice that we closed right above the um, Bollinger Band, upper Bollinger Band. So we don't have a buy signal just yet. So, but quite a distance away from almost 66 yesterday. This is the weekly chart, and obviously a big topping tail on there. So we shall see. But momentum is still strong on the daily and it's turned up on the weekly. So we shall see what the rest of the week brings. Going over to take a look at the expected move. Um, we are 123 points left until the end of the week. So only despite the distance we've traversed already, we still have 123 points expected through the end of the week. So lots of volatility to come for sure. And if we look at the VIX um, and evaluate where the calls and puts, now you can see the wide spreads between the bid and the ask here, wider than normal given the volatility we're having. But we'll call this about $3 for the calls that are about a $1 out of the money, and then about 525, 550 for the puts. So puts are priced a lot more expensively than equidistant calls. So that's a good sign and a feather in the cap of the bulls, meaning that no one's paying up for volatility right now. They're looking to sell volatility and therefore they're buying puts on it. So we'll see. This is one positive about the action. And given what we have coming, um, we have not much tomorrow, a 10-year note auction and petroleum status report with mortgage applications, pre-market, not market movers. But Thursday, we've got jobless claims and wholesale inventories, big deal. But we also have a 30-year bond auction. But they haven't been moving things as much of late, but jobless claims is one. And you might recall from Sunday's video, Friday has no economic reports. But we do have a plethora of earnings. Um, we've got a bunch this evening from um, crowd favorite SMCI, which is not on here, which was up early and then gave back most of the gains. But tomorrow we've got, or I should say, well, it helps if I look at the right day. So Amgen was down a little bit after hours. SMCI was down, and Rivian is down. Win was up a little bit before the open tomorrow. We're waiting on Disney and CVS Health as well as Shopify and Lyft. Lyft is a name that we closed out today ahead of earnings, as we did also for Rivian today. After the close, that's when we get Robinhood and Zillow. Thought I was losing my mind here because I didn't recognize these names. So it helps to pick the right date, I guess. So let's take a look at our active trade list as far as options go and then call it a night. It's not what I wanted. There we go. All right, we'll start out with AbbVie charts. AbbVie had a pretty interesting. Now, what's going on here? Um, So, yeah, the little indicator from Zoom was in my way, so I couldn't tell and scroll over. So yesterday, kind of that's helps to click on the right ticker. I'm having a good night. Abby was catching itself on the 8 EMA, and bring this back down. There we go. Our calls, our puts that expire in September, um, were a little above water on it, or below water, down 6%, no big deal. And we're still within $8 of an all-time high. CrowdStrike getting an upgrade today and showing some strength and bouncing off yesterday's low, which was 200.81. A little scary there for a minute, but wouldn't you know, uh, we're almost back profitable on these puts, which expire next week. So the more distance we put between 200 and us is a good thing for these options, especially since earnings are a few weeks away. I think they're on the 28th of August. So like seeing the strength come back into CrowdStrike. Cisco is a new trade that we put on today. It was looking a lot better earlier in the day, but and has sold off over the last few days. Um, so down a little bit on this one. Cisco reports next week, and it has sold off on the last three earnings reports. And typically, companies don't disappoint 4 quarters in a row, and this gives us a chance if Cisco wants to join the market party and come up a little bit before earnings. We're in a position to take advantage of that. Otherwise, we'll just take it off ahead of earnings, kind of a lotto type of thing. Fastly reports earnings tomorrow after the close, and not looking too great. And we'll probably be taking this off tomorrow. We're down 38%. Had such promise, but you know, didn't participate in today's rally. It was down about 9 cents, but that's what you've got with sub $10 stocks. GM, our long-term call spread, bouncing off the 200-day, and a little underwater on this, but lots of time until the end of 2026. Lyft is one that we took off ahead of earnings, and this is a 15-minute chart. You can see that it's up about 18 cents in the aftermarket, but I'm going to look at putting something back on for Lyft, seeing how the action is that way. In case it got hit hard on earnings, we didn't want to be in the way, especially since it was an 11 strike put right at the money. You just never know. Triple M holding up very well after the earnings gap up, and our puts are up about 59%, so that's nice. Match, another long-term play we have, still holding up relatively well with earnings. This one has pretty good growth and kind of riding the ship as far as online dating and what have you. But we're down about 11%, but this has until January. So this is more of a long-term play that I think will do well once the market is a little bit more supportive. Procter and Gamble, a staples play, bit of a topping tail there. We're up 44% on these puts, which expire in September. Been doing P&G puts for months on end with clients' accounts, and it finally took a little bit of a sell-off for me to kind of extend it out for uh, subscribers because I didn't want to pay up, or I wanted to wait for a sell-off in PG to put those on. Qs, you can see, again, we closed in the low end of the range. And as a result, we're still down on these put spreads. And the question came up in the forum is, should we be adding to them? I want to see a little bit more strength in the market. So before I start adding more volatility plays, you just never know what could come. But as soon as I see kind of all clear, well, um, not necessarily all clear, but signs that volatility is really waning. And that might be a VIX under 25 or 23 before we add more of these Q spreads. Rivian, one we closed before earnings. It's a shame it didn't pan out, but I think we will have ended up making money on this one. After hours, it's down about $1.12, so not too bad, but still we didn't have enough of a profit to carry it into earnings. SDS, the double inverse of the SPY, has been good to us. We've had a pretty good result with it in terms of our hedges. And so we're up to $4 profit. Not sure why that's gone, but that was a 315 profit. Yeah, so it's holding up pretty well. We are up 187%. It came back a little bit today, but that's to be expected with the bounce. So we keep an eye on this one. If market really is going to start running, we'll just close these out. And of course, you can always do what you think is best for your situation. You don't have to wait for me to close them out. You can keep them on. It's your money after all. SoFi, not holding up as great as I thought it would. It's under the 50-day. It's a January put, but we're back to even on these, and they don't have earnings coming up anytime soon. But yeah, I'd like to see it stay away from our short strike, but it's still about $1.43 away from our strike, our stop right there. SPY, we still have the call combo on, and we are currently down on this one because of the elevated volatility. And so we're getting closer, well, we got a little closer to our call spread area, but we're going to need much more strength for this. But this on its own, in terms of if volatility starts to melt away, then the short premium that we have in those will actually push the price up, even if we don't get back up to the call spread, the 545, 555 call spread. But I'm waiting on some strength here and for volatility to melt away before we decide on what to do with this particular play. But for right now, it's just a hold. STX, we rolled those out to October and hasn't done much. Finding resistance at the 100-day right there. Still holding up pretty well, but we've got plenty of time on this, and hopefully this roll will prove to be a good one. Couple more to go. Walmart, holding on, and now just below the 50-day, and we're now down a little bit on these earnings coming up next week. Had a feeling I should have closed these last week when we were at 50% profit. But if market shows strength, Walmart is definitely going to be one participating, especially since staples are doing well in a defensive environment. So going to keep an eye on this one and perhaps close it if we get a good day in Walmart, since we're going to have to close it next week anyway, when earnings are on the 16th. So it's a week from Friday. And then finally, energy taking a beating and finally recovering a little bit yesterday and today, but not enough for our call spread, which got killed. And so we closed the rest of these at 63 cents. And so this play is no longer open, and it should have been closed today. I'm keeping an eye out for different plays every day. And if you have any questions, at Trader Geek Sam in the forum or at Trader Geek on Twitter. Hope you have a great evening, and I'll see you tomorrow. Bye.